I will be discussing self-employment and tax relief. If you're self-employed and are having some tax issues, it runs a little differently than somebody that has no tax or somebody that's a W-2 wage earner. The major difference is because when you're W-2, you get your W-2 and you have the FICA tax, which is the taxes are automatically taken from your paycheck. That go for the payroll portion of it, not the income tax. Versus when you're self-employed, you have absolutely no taxes taken out. This is really common amongst all individuals that are working for real estate companies, such as real estate agents, mortgage brokers, and now with a lot of the freelancers that are doing a lot of the Lyft, Uber, Instacart driving, you get a 1099 and it's just a gross, it's just a flat amount that you're going to get. No taxes taken out. That means if you're due $1,000, you're going to get the $1,000. Not one penny of taxes taken out. You might be paying fees, but the fees are going towards private company. So that's the major turning point. Is now that you have more responsibilities when you're self-employed to keep better records. Now, what type of records? It basically breaks it down to two different components. The very first component is your income. You got to account for your income. If you're in real estate sales, it's basically straightforward. It's a 1099. You sell several houses a year, maybe working for one, maybe two companies, but you see the total amount gross of what you get. Now, if you're self-employed, but let's say you're doing some other line of work, like if you're doing Amazon sales, eBay sales, or you're running some kind of small business where you have a lot of transactions as far as cash, you collect checks, you get credit cards, then it becomes a bit more challenging because now, it's not a simple 1099 you're getting. Now you have multiple sources of income for your one business. The way we do here at Semper Tax Relief, when somebody has missing back taxes and they're self-employed, the first thing we do is we get the wage and income transcripts. That's all third-party reporting of 1099s on your record. That means every company that you work for has to report the 1099, and it is listed on the wage and income transcript. From the different transcripts that there are, that's the most appropriate, that has how much. Now, aside from the 1099, it has everything else that gets reported. So if you're paying a mortgage, the mortgage interest gets reported. If you have interest with the bank, that amount gets reported. Also, if you have any other type of incomes like Social Security income, or maybe you did work a part-time job in addition to your self-employed income, it would list the W-2 income on the wages and income transcripts. So that's key right there. But so what now? So the one major component is income that you have to account for. The second component are business expenses. And here is a part that now that is in your power to just get organized and give the most reasonable expense, the reasonable ordinary expenses for your line of work. That way, the gross income has to be offset by the expenses that you're paying for the business. For example, if people that are in real estate have a lot of expenses, especially if they're hosting an open house, the signs they buy, listing agents with getting the sign put out in front of the house, they belong to the MLS board. The fees, they go to a lot of meetings and functions and stuff like that. So you're able to expense all the reasonable, ordinary, necessary expenses. For Lyft, Uber drivers, those are independent. The mileage might be one of the best deductions out there, even though these companies sometimes give you the log of only when you have the client in the car for the drop off, but all business mileage should be included. That means, the drive to go pick up the food, the drive to go pick up the client, all those miles should be deducted. But if Uber Lyft doesn't have those records, that's where you're able to provide the additional mileage, the additional expenses that you're paying for. It's almost like this. It has to be reasonable, ordinary, necessary, though, for your line of work. That's why it's up to your responsibility. Now, you could hire a bookkeeper, but if you're not at the level where you could afford a bookkeeper, you could go comb through your bank statements, your bank accounts, certain credit cards that you used in the past to reconstruct the expenses, and then just have a spreadsheet. We have a pretty good template spreadsheet that we have our clients kind of plug and play with the type of expenses that the self-employed business plays with. So when somebody's self-employed for multiple years, there would be need to now with the income and expenses. When we put it together in a spreadsheet, this is what's known as a profit and loss statement, and that's exactly what we need each of the years. So what we do is we go back with the wage and income transcripts. That's the accounting for the income. With your bank statements, maybe if you're the type of business that does get credit cards and collect checks and cash from clients, you would rely on those records. Now, the credit card companies, they would give you a 1099K, and that's reported on the wage and income transcript for the year, and then the monthly amount of credit cards you did collect. And we would apply going back year by. So if you're self-employed, have not filed in several years, we will go back to the oldest year and file all the different years. Now, the caveat is that there's a lesser threshold to file your tax return if you're self-employed, but you still get all the other credits. If you didn't file your married filing joint, your spouse is a homemaker, then it's a married filing joint return. Your kids come into the regular tax return. So everything now is business as usual regarding tax filings for the prior years. Um, but that would be the step one regard resolving your tax balances. What happens if the IRS kind of does the tax return for you if you never filed? They could do what's known as a substitutable return, where they just get your gross income, they tack on the self-employed taxes, the income taxes, interest penalties, send you off that fat bill. Is called a substitute for return. In certain circumstances, you could go back and replace that. Um, in other circumstances, if you have other years you haven't filed, you have to file all the different years before you submit for relief. And now what you need, even though the tax year is not over, you need a more recent profit and loss going on and kind of get organized. One of the other steps, aside from filing your tax return, that gets you in compliance, which is an absolute necessary step, is that you would need to do what's known as quarterly payments to the IRS. These quarterly payments count as deposits for the following tax year. For example, right now it's 2021, and if you have not made one single deposit, it's time for you to start making these deposits. You could make them more often than the quarterly amounts, because the way that works, when you file your tax return, it starts a brand new cycle of the minimum amounts and the time frame for you to file. So when you file your tax return, the new cycle begins every April. You have to make the quarterly deposits. April 15th marks the first quarterly payment. The second one is June 15th. The third one is September 15th. And then the last one is the following January 15th. And the deposits you do count for when you file your tax return. You have all that in deposit, and it's called an ES payment, or estimated tax payment for the current year. So right now you would allocate that as a 2021 estimated tax payment. That way, people that have back taxes, you would always want to allocate where the payment goes, because if you don't allocate it where the payment goes, the IRS is just going to apply that payment to wherever they feel like it. So if you're a self-employed individual, you have missing tax returns, you have to make these deposits. But let's say you owe a balance of $50,000 to the IRS for back taxes, and if you want to make $1,000 towards your deposit for the ES payments, if you don't mark it as ES payments, the IRS is going to put it towards that $50,000 that you owe on, instead of the deposit where it belongs. And the deposits are really an important step for tax relief, because that opens up the floodgate, that opens up the gates for the tax relief programs that you're going to be qualifying for. It's also an important step. If you qualify for the offer and compromise program based on the merits, after your profit and loss, your net business income, it's a certain amount, you qualify for offer and compromise. You have no equity in assets. If you submit this offer and compromise and you're self-employed, if you have not made this deposit, it's going to be immediately kicked back. It's going to be returned. Not even reject. Rejection is a better option, because you have appeal rights where within 30 days you could appeal and get a secondary look. You can't even get there. You cannot even get the rejection. What they do is they return it, and it's like starting from scratch. And they're going to say, you know what, you're not in compliance. So that's why the deposit when you're self-employed is one of the most important key aspects of getting tax relief. It's almost handling all the different situations in one. Probably you have maybe some past tax debt already that you owe in collections. Maybe you have some missing tax returns, and then you have to be organized, get your profit and loss statement, and then you have to make your deposits. But the moment you do that, the moment you make the deposits, and the deposits, by the way, they are calculated by how you last filed as the minimum amount. And if you never made any, I would always just recommend to make something, anything. It helps you out and it meets the minimum requirements to go on to the next step of offer and compromise. Regarding back tax filings too, we are able to electronically file the 3 most recent years, which is current year and then the 2 prior years. If it's older years that you need tax filings for tax year 2017 in the past, those have to be put in the mail and processed by the mail with the IRS, simply because the IRS, they do not have the ability or the systems to get e-filed acceptance for older years, only processed by mail, and there are still a lot of big delays. So what programs does somebody that's self-employed qualify for? It's just all the programs are available to you. If you go back and replace the tax return that was never filed, Sometimes that might be the solution. Sometimes it's a reasonable amount. You know, the IRS, sometimes they go after you and you're going to be owing, you know, $200,000 with interest, tax, and penalties. But if you go back and replace the tax return, and let's say the tax debt is only about, you know, $900, and then you're able to afford to, you know, repay them through an installment agreement because that's the most reasonable solution to you, then that is a solution to you. But sometimes when you file, if you're self-employed and you catch up on all the tax filings, and now you have a bigger tax debt, you know, sometimes it happens. Somebody that's self-employed kind of puts it off for 1 year because they didn't quite understand, or they got a draft of a tax return, never filed it because the tax was too high. Then year two, year three, year four happened, and all of a sudden you're much big. Now you went from like in process with IRS owing zero to all of a sudden having a tax balances, which is why somebody never got around to doing the tax return. Now you file, now you have the balances, and that's also pretty common when you have a lot of missing tax returns. We don't know which way they might go, but somebody that's self-employed with 1099 income, it's very possible that somebody gets now into tax debt where they never had a tax problem in the past. So then the solutions would apply. You get all filed up, but then all of a sudden, you know, you would want to get all caught up and then make the proposal for tax relief, which are either offering compromise, non-collectible status, hardship payment plan, you know, all of those programs. But the first step is getting your taxes all filed up. You cannot move on to the next step without that occurring. So get organized. Profit and loss statements. You are able to get the wage and income transcripts in case you don't have the 1099s handy. Once the taxes are all filed up, keep good records and make the deposits. We always help our customers here. We always begin with a free case review to see if, you know, we might be a right fit for you. At the same time, if you're the right type of case that we're able to handle here. But anyway, we do have a toll-free number that operates 24/7. The phone number is 855-712-7419. Once again, it's 855-712-7419. You call that up, and then what that phone number does is, you know, it alerts our onboarding team, and they more than likely schedule an appointment. You know, you could call after hours or weekends. It picks up, and what we do is we schedule the phone. If you call within business hours, it gets transferred to one of our onboarding specialists that could review your case in thorough and get you necessary, so, you know, get you back in good compliance with the IRS. Anyway, thank you for watching.